Good morning. It's Market Day Report. Time for another week of trade. And we start this again by looking at how we finished off last week. Now, on Friday, we saw mostly lower trade. Corn was lower, soybeans, the entire complex was in the red. All three wheat exchanges lower, and the cotton market lower. Now, we're working our way towards a World Ag Supply Demand Estimate, or WASDE report. That comes out tomorrow, 12 p.m. Eastern Time, helping us get ahead of that and kind of figure out where we start the trade this week. Brian Hoops. Brian is with Midwest Market Solutions. All right, Brian, thoughts here as we get ready to start this week of trade?
Well, good morning, Tony, and hope everybody had a great weekend. Yeah, this week and next week, this is our final couple weeks of trade as we just going into the holidays after that. So really this week, next week, your full weeks, and then you get into Christmas, New Year's holiday, and that's when things are really going to slow down. So you have a WASDE report this week, NOPA crush next week, cattle on feed next week, and that kind of wraps up all the government reports for the year that we're going to see. Tomorrow's WASDE report, I don't know that's going to be much of a big deal. I tend to think the government hasn't been open long enough for them to change significantly any export business. With quarterly stocks coming out next month, you're unlikely to see many changes in feed usage for corn, and really just not much usage at all for soybeans. So I wouldn't be surprised to see ending stocks left unchanged across the board for corn, soybeans, and wheat. Just again, letting this be kind of a non-event. We did have a private export sale announcement this morning, 132,000 beans sold to China for this marketing year. Now, we've made kind of the comment recently, 2 weeks ago, we had 3 sales, and every day we had a sale, we closed lower. Same thing on Friday. We had another big sale of soybeans. We closed lower, but there was also some news that there may not be a trade agreement between the U.S. and China at this time. There's been some allusions to that, and there was kind of confirmation that maybe we don't have this agreement that we thought we did, and beans were sharply lower off that news, as well as the Chinese selling futures. Now, the sale this morning, it's small enough you're not going to see a big movement in the futures off of that news, so you're left with maybe more choppy two-sided trade and maybe some positioning ahead of tomorrow's report. As we have been down for several days, we might see an update going into that report on Tuesday.
Okay. Hey, Brian, let's take a quick break. We'll come back on the other side. We'll look at livestock markets, and we'll also look at some outside markets as well. It's all ahead here on Market Day Report. So let's talk cash trade here. Kind of interesting. In the north, 220 to 222. Then we hit Friday, and it bumped to 225. Yep, Packers having to pay anywhere from $3 to $5 higher than they paid just a day earlier in the week. As far as dress, 340 to 345. And in the south, your guess is as good as mine. Couldn't really find enough to give us an idea of what the cash trade was across Texas and Kansas. We might get better indication a little later today, and maybe Brian Hoops can help us out on that. Let's go live cattle. This is how we settled the session on Friday. Look at December, up 580 to 27 1/4. By the way, we get a cattle on feed report that's set to come out on Friday. February, 227.37. It was up 337 on the session. Now, 4 straight sessions higher for feeder cattle as the January contract settled 338.97, up 240. Again, higher across the board. And the hogs higher for the 3rd straight session on Friday. D's 81.60, up 47. Again, Brian Hoops, President, Midwest Market Solutions. Brian, thoughts here on the protein sector?
Yeah, just clarification. Cattle and feed is a week from this Friday. It's on the 19th, I believe. So it's not not this Friday, a week from this Friday. Cash trade sharply higher last week, of course, very strong markets. You know, if we thought it was a matter of time where the Packers had this huge margins to work with and that they would end up paying higher for the cash markets, those numbers are still very tight across the country, and they were expanding kills. So we're going to need more inventory at least for the next couple of weeks before we get into the holidays when those kills start to slow down. They won't have to pay higher money. We did see that sharply higher cash trade in the north last week. Some light trade in the south developing on Friday, 225 up to 226.50. Some very strong numbers. That's at least $5 to $10 better on the bulk of the cash trade, and you know, it was strong all the way across the board on the dressed and the live basis. Now, December futures were discount to the cash coming into the week. They really rallied on Friday. They're a little bit premium over that cash markets, but nothing too urgent. We're probably not going to see any deliveries. They do start this afternoon, but I don't think you're going to look at any deliveries against that December contract at this point in time anyway. This week's cash trade looks at least steady, probably higher once again. You know, you have that momentum built to the upside. Packer margins are still in the black. Now, they did take a hit last week because they paid higher cash trade and the cutouts didn't stabilize and move higher. In fact, they were around $5, $6 lower in the choice and the select. But right now, it feels like the bulls have some momentum. The January feeder cattle futures are still discount to the index, $6 or $7. That's going to be, very bullish, I think, going into December and here into January. That discount, you just have a hard time trying to sell a discount to the index. That usually doesn't work out. It's usually a bullish scenario. And finally, seasonals are higher, kicking in today, going into the end of the month. Seasonals are stronger in here during this time frame for futures.
You mentioned seasonals, makes me think of the weather patterns. How about nat gas? It's been higher for 3 straight sessions. And this nat gas market today, kind of in the red as we get the week started. RBOB's been higher for 2 straight sessions. We're lower here. On the RBOB, there was diesel and RBOB. And then finally over to WTI, West Texas Intermediate. Final thoughts here, Brian?
Well, that nat gas has been a ride. It was sharply higher on Friday. And then by the close on Friday, it started to give back some of those gains. So maybe a little crack in the armor. And then overnight, sharply lower. And it has extended losses since I came to work this morning. We're down another 10 or 15 cents in that nat gas. We just continue to see a huge amount of volatility over there. It's called the Widowmaker for a reason. There's certainly a reason that it's earned that nickname.
Okay, Brian, always great to see you. Brian Hoops, President, Midwest Market Solutions.